Hello everyone, today is Monday, January 12, 2026 Eastern Time. Welcome to Panda Finance. Let's take a look at the top 10 global corporate news stories from the past week. Here are the details. Alphabet overtakes Apple as market capitalization nears $4 trillion. Alphabet's market capitalization has climbed to $3.97 trillion, surpassing Apple's $3.81 trillion, underscoring how the two technology giants are diverging sharply in their approaches to artificial intelligence. While Alphabet has benefited from aggressive investment in commercialization across its AI ecosystem, Apple has taken a more cautious, hardware-centric path. The world's most valuable publicly listed company remains Nvidia, with a market value of $4.49 trillion, followed by Microsoft at $3.56 trillion. Artificial intelligence boom drives earnings reversal at Samsung Electronics. Samsung Electronics is poised to report record quarterly earnings, marking a decisive turnaround as demand for artificial intelligence infrastructure accelerates globally. The South Korean Technology Group, the world's largest memory chip manufacturer, forecast fourth-quarter operating profit of approximately 20 trillion won, more than triple year-earlier levels and well above analysts' expectations of 17 trillion won. The outlook highlights the durability of the artificial intelligence investment cycle, particularly as the industry pivots toward high-bandwidth memory chips, where tight supply has positioned Samsung as one of the primary beneficiaries of a growing global shortage. Elon Musk's xAI raises $20 billion in oversubscribed funding round. Elon Musk's artificial intelligence company xAI said it has completed a $20 billion financing round, exceeding its initial target of $15 billion. Investors include Nvidia, Cisco Systems, Valor Equity Partners, and the Qatar Investment Authority, according to people familiar with the transaction. Nvidia had previously been reported to be considering an investment of up to $2 billion. The company did not disclose the breakdown between debt and equity, nor individual investor allocations. Nvidia and Cisco are also strategic partners and suppliers to xAI. General Motors takes $7.1 billion impairment as electric vehicle strategy contracts. General Motors said it will record $7.1 billion in impairment charges as it scales back portions of its electric vehicle investment, becoming the latest automaker to retrench amid weaker demand and policy shifts under the Trump administration. The bulk of the charges include $6 billion tied to reduced planned production and supply chain commitments, including $4.2 billion in cash costs related to contract cancellations and supplier settlements. An additional $1.1 billion will be booked in the fourth quarter, reflecting ongoing restructuring at the company's joint ventures in China. Rival Ford Motor Company announced similar but larger charges several weeks earlier. Trump bets on Venezuela's oil wealth to drive political change. President Donald Trump said United States energy companies would return to Venezuela with investments totaling tens of billions of dollars, placing oil at the center of his strategy to reshape the country's political future. Trump argued that American drillers, many of which exited Venezuela decades ago, would rebuild the nation's oil industry and unlock enormous wealth. However, analysts caution that the plan faces a significant constraint. Global oil markets currently show limited appetite for additional supply, particularly heavy crude, complicating efforts to absorb Venezuelan output. Glencore and Rio Tinto reopen talks on potential mega-merger. Mining giants Glencore and Rio Tinto have revived discussions over a potential merger that would create the world's largest mining company, with a combined valuation exceeding $260 billion. The companies held similar talks nearly a year ago, but negotiations ultimately collapsed. The renewed effort comes as intensifying global competition for copper resources reshapes the mining industry's strategic landscape. It remains unclear whether Glencore's extensive commodities trading business would be included in any final transaction. IKEA to close 7 stores in China as strategy shifts towards smaller formats. IKEA China announced it will close 7 brick-and-mortar stores beginning February 2, 2026, including locations in Shanghai, Guangzhou, Tianjin, Nantong, Suzhou, Ningbo, and Harbin. The company said the decision followed a comprehensive review of customer touchpoints and reflects a shift away from large-scale expansion toward more targeted market penetration. IKEA plans to focus on Beijing and Shenzhen as pilot markets and aims to open more than 10 smaller format stores over the next 2 years. Sam's Club China membership surpasses 10 million as sales surge. Paid membership at Sam's Club China, operated by Walmart, has surpassed 10 million, according to market sources, underscoring the warehouse retailer's rapid expansion. Sam's Club China generated more than 140 billion yuan in sales in 2025, up roughly 40% from the previous year, making it the primary growth engine for Walmart's China business, including Sam's Club, hypermarkets, and community stores. Walmart China has set a target of exceeding 200 billion yuan in total sales by 2026. Sinopec and China Aviation Oil complete corporate restructuring. China Petroleum and Chemical Group, known as Sinopec, has completed a restructuring with China Aviation Oil Group, consolidating two dominant players in energy refining and aviation fuel supply. China Aviation Oil, founded in 1990 and reorganized in 2002, is Asia's largest integrated aviation fuel service provider, while Sinopec is the world's largest refining company by capacity. The restructuring strengthens China's aviation fuel supply chain amid rising air travel demand. Yu Liang steps down, ending three-decade career at China Vanke. Yu Liang, a founding-era executive of China Vanke, has resigned from all company positions upon reaching retirement age, the property developer announced. Yu joined Vanke in 1990 and rose through the ranks to become chief executive officer and chairman, shaping the company into one of China's most influential real estate developers. Following his resignation as director and executive vice president, Yu will hold no further roles at the company, closing a career that spanned more than 3 decades. Thank you for tuning in to today's financial news. We look forward to seeing you again.